So this is going to be a quick little market update, going over some potential opportunities where I see the broader equity market headed in the next couple of months, right? And why I was kind of wrong. I wouldn't say wrong. I would say overly bearish and not understanding the potential distribution of outcomes within the window that we're in, and just what I see going forward, right? So we obviously have the UNH trade. This was phenomenal off the 335 spot, and then the internal higher low last week where we get the break of structure. That's the options opportunity, and then the broader commons and leverage DTF opportunities we have as well from the undercut of the May lows and just the higher low we find after the Buffett gap and then the progression gap reclaim, right? Um, However, what I will say is this is a slow moving name and a slow moving sector. And so once we fill that 380 gap, I think the vulnerability on this trade is going to be a little bit less optimal. And I think it's going to be more of a wait and sit back with that longer term shares position and taking the shorter term exposure as it kind of sets up, right? So this is absolutely still a watch. I do think that this looks great in terms of the break of structure and the consolidation above that 360 spot. And I do think that this will continue to that 380 gap, and then covering the options exposure and seeing what happens after is going to be the most optimal play. But otherwise, this is a really good name, and the end all target is really 490. If I'm being completely honest, when you understand how this works in terms of where the draw is going to be, 440 to 490. But we have to understand once again, healthcare names. It's already reverted about, I think it was 60% from the lows that we put in June or August, 57%, and then the full gap fill would be about 60 something. Yeah. So a massive reversion, obviously a massive campaign behind this, but you have to understand when the risk to reward gets a little bit less optimal for the long exposure. We have Intel 37 was kind of my initial target, if I'm being completely honest. We have the options trade here off of this little, I talked about this little consolidated range and the first initial low of accumulation and the July earnings gap 2024 progression reclaim. And we get the extensive rally back up to the internal highs we built out right above this initial low, right? We have our initial low here in May, in April of 2024. A nice pop, the breakdown off the report, and the continued accumulation throughout here. But what I will say is this just becomes a little bit less optimal, right? And I don't really see the risk to reward right now. The only opportunity that I liked on this for commons was this path of least resistance underneath the 2643 spot, where which the highs that we put in November, and the path of least resistance with the draw being to 29 to 37, right? We can sit here, we can potentially have a little bit of exposure left on commons, but after what was, a 60% move, and highs being taken out, gaps being filled, we have to be a little bit cautious, right? But I do think that 40 to 44 is potentially there. We have to be a little bit cautious in terms of the leverage exposure, but a commons position having a little bit of that remaining there with a risk-free exposure is not too bad for me, right? Nike. I'm a big fan of Nike right now. We obviously get the pop off the report and the failure within the INWOG from September, right? This was not the best look. I think what you see here is kind of that gap being filled and a pop off the report that traps a lot of buyers, and we're going to see the draw be probably to that 62 to 65 spot, and that's going to give us our potential weekly high or low. We already have a really good spike on volume from last week. Ideally, we can see something set up within this range, within that kind of golden pocket range. And this is a commons trade, and anything through 80 is going to be an options trade. But building out a position within this gap from August or June, I keep messing up my months, is not a bad idea at all. I really do like this. Like I said, very similar to like an Intel, very similar to these names where we have preliminary signs of accumulation on an underperforming asset. Not only, for this range in 2024 and 5, but, from the 2021, 2022 kind of sequence, right? So that's a good focus on commons. Ford was pretty clean. I like commons on this. I don't really like options. But very coiled underneath this gap from 2024, the July report. Saw a pretty nice pop, and then we obviously have some news today that shredded it about 6%, but very coiled. Talked about the very notable maturity behind the campaign on Ford, not only within this kind of three lower accumulation that we started in 2023, and then August 5th, and then April 7th, right? The three really big time periods for this to happen, right? The reversal that sparked the entire equity market rallying in late 2023 in quarter four, August 5th low, and then April low, obviously. So three really big pivotal points and times within the equity market. This name has been consistently getting bid throughout those ranges and within those time periods. So it's something that I'm definitely going to keep an eye out on, on not only on a shorter time frame perspective, but on a higher time frame perspective as well, to potentially take out the highs that we put in 2022, right? A long-term buy. I'm not a big fan of energy at the current moment in time. Great commons trade was set up, but I do think that when I look at the energy sector as a whole, I think that, especially with the Buffett news on Oxy, in my opinion, especially because when I think about the time frame we're in, I already said before, if we don't get a sell-off prior to quarter four, we're not going to really see that until next year. And the way a lot of charts look, and then the way that this all is setting up, I think that energy is potentially going to be an outperformer next year. But for that to happen, I would like to see the April lows taken out, right? I think there was something big that happened there, and I think that if you see these lows taken out, it's even more of an extensive accumulation built on a name like Oxy specifically, right? Where we see a nice reversion, but this is not a structurally sound rally, right? Like, you look at how the highs are sold off, you look at where the volume comes in at, this is not necessarily super appealing. And if we can just undercut these lows in that 618 golden pocket range, I think that's going to be a phenomenal opportunity to build out a longer term position on energy. So that's something that I'm definitely keeping an eye on in terms of the energy sector as a whole. I'm not necessarily a big fan of this right now in terms of long exposure. Same with Lyft. I mean, this was not bad, but this was really nice comments from 13 to the 20s. And currently we're losing that 2152 spot. This is kind of like similar to the Intel. Like, this was a really clean 70-80% rally. 78% rally, and you have to de-risk your position, potentially leave a little bit more room for what could be another 30-40% if we fill this $30 gap from 2022. But we don't know quite yet. This does look pretty appealing in terms of a character change. Snow, I do like Snow Commons, the coiled up action underneath this 230 spot for a move to 264. That's really about it for me on my Commons. When you have a really nice progression gap reclaim, spike off the report, consolidation, sweeping lows, and getting that kind of change in hands, all backed by a massive accumulation that kind of showed its hand in August underneath the 2022 lows. Saw a nice rally and then a higher low and had the highest volume on that November 2024 report with a 30% pop. I do like that on Commons. Lulu is pretty appealing on Commons as well, but it's not really a big focus of mine at this point. Building out a position on a longer term exposure would not be a bad idea if you want to trade this back to 200 to 300. But I think you have to leave room for the undercutting of the COVID lows because there's not such a clear objective risk right now. And you don't necessarily have the worst daily sequence after this gap, but not necessarily the best as well. So this is kind of like a side watch. I like this for a long-term buy. I like this for a shorter-term trade setting up very soon, back up to this gap fill, but I'm not very confident in this right now, and it's something that I'm just going to keep my eye on going forward. PAW, we're seeing a very weak pop. That's something that I can 100% wholeheartedly admit. But I don't think that this is going to be the time frame that we're going to necessarily have a short-sighted focus on this name. It's just there to kind of pay attention to how we act at these highs. We see a pretty nice hourly spike in volume yesterday, or on Friday, right? And we'll have to see how this looks going forward, right? We have the AMD 30% gap up, which was actually insane. Didn't take out the 227 highs that we put in March of 2024. This was a decent look short, but like I said, the time frame is pivotal as well. And then SPY, this doesn't really have much of a vulnerability in terms of short-sighted exposure. There was a pretty good short today, though, off of Friday's high on a nice little gap. It was a pretty nice short today to take out those lows that we put in on Friday, but not necessarily anything I'm sitting here super duper confident in terms of short exposure on options, right? Schwab, this was a short, not necessarily a main focus of mine. The financial sector doesn't really give you a clean edge in terms of a short exposure I think this is going to be something that can continue to develop a range here into Q1 of next year, maybe give us some preliminary signs similar to how we saw December 18th, the FOMC end of expiration, where we kind of see a bleed, and this kind of sets it off and gives you a nice little footprint on the financial sector, right? Like I said, I don't think the short-sided trade is really going to happen barring some massive drastic tape flip. I think that it's going to be more, the potential is going to be higher. The probability is going to be higher for this to happen in post-January, February OPEX, right? Because that's how the markets move in their structure. There's only a few windows for the short side exposure to really get going here. I do think that you can potentially play some shorter time frame shorts into Q4 during windows of weakness, but that is always very speculative as well. Hood, I think this is still a distribution, but I don't really have much else to say about that. I mean, this fucking ripped. Palantir, same kind of thing. TSM, same kind of thing. Just nothing really vulnerable yet, and never really gave us an edge, personally, right? Disney, something I'm potentially watching for a change of character here. No exposure that I'd like yet. Coke doesn't look necessarily too bad. I don't really have much of an edge on this name, or Pepsi, although the Pepsi high low is potentially sitting there. I'd rather wait and see what happens with the report on this, right? CRM, I'm a really big fan of CRM commons to 300 range. I think what you see here is a really notable underperformer, right? We see the bleed into April, right? And we see the undercutting of the August lows that initially sparked a rally. We see, another low bid on August. We see a kind of climax of the report get bid. We see a nice spike yesterday. I really like this little $20 range for commons back up to the $300 spot. This is a big time focus of mine. Another commons trade. Notice how there's been a lot of commons trades, easy commons trades lately, right? It's a big thing for me. I've been noticing, and the opportunity within those names. So this is something that I'm definitely focusing on, and I do like commons within this range, and I think that this can give you a really nice pop going forward, and this is going to be a top focus of mine. PayPal is kind of a good look as well, right? We obviously have the underperforming name, cut, the valuation cut fucking, is this going to be 99%? 80%, 80-ish%, right? The climax is, a beaten down growth name, and it's finally potentially developing something that I really like in terms of an opportunity. No real exposure that I want to put my money on yet, but a potential trade back up to the $80 to $90 spot is sitting there. I would personally like a little bit of a cleaner character change, right? And similar to Snap, massive amounts of volume. Coming in down here underneath the COVID lows, notable climaxes with relatively decent spikes that we see throughout this range. But I don't have a character change here. Like I said, with like a lift, right? We can sit here and we can speculate, and we can sit in this position. Obviously, with commons, you're not trading against time, but we can sit in this position on each attempt at a higher low and continue to buy position, or we can wait for the clear character change within a pivotal spot. And I think that's going to be where I would say my edge is at on Snap. So I like UNH a lot for commons, and the options exposure is getting a little bit less vulnerable. Same with Intel. Like, this is kind of not a massive focus of mine anymore. I really like Snow to 260, potentially setting up an options trade soon. I really like CRM to 300 in my opinion. I think this is going to be a very vulnerable opportunity on an underperforming name with very notable climaxes on both the previous reports we've had in the past 2 quarters. I think Ford can push $14. I think this is a very consolidated name on a daily perspective with a gap above to be filled that's been absorbed of supply. And I also think that this is a massive higher time frame accumulation that's probably going to outperform going forward. And if you have a long-term portfolio, I'd not hesitate to pay attention to Ford, right? Like, I like to preface the time horizons, right? You can take a position on this underneath 12 to 13. You can take a position on this from 9 to 12. You can take a position on this within this range, targeting 20. Understand your risk, your exposure, your reward, and your time frame, right? You can have 3 positions on Ford at one different time, and they can all be completely different exposures and perspectives, right? Other than that, I don't really have much else to say. I mean, we have a lot of names that just don't really give you good looks, but that's because they've made extensive moves and the opportunities were there in April and were there in August, right? And I just think that you have to be you have to be a stock picker, most likely. We have a meta gap fill of 695 from the report that we had in July, which actually was really, really clean, especially with the preliminary signs of a cumulative sequence and a buyer within this gap and the failure to really take out these highs from August. This was a really nice, shorter term options trade. You can take this, especially when we have the massive volume spike down here, opening print to gap fill kind of being your target, especially when we have a really constructive, like capitulation rally, internal higher low, and then just a stair step on like the 5-minute chart back up to this gap fill from the yin long. And I mean, that's you can take this off of 695. You can literally, this is the trade right here, right? This is your first take profit is going to be at the weekly open, right? It's going to be a 2.16 R to R. This is going to be a 3.3 R to R, 3.4 R to R. So you have an average of you literally have a 3 risk to reward on this, and you have the perfectly beautiful higher lows that we're stepping in here, absorbing the opening print dry, basing it, rallying to the full gap fill, and that's your trade. That's a beautiful opportunity on Meta, and that's a beautiful trade on some weekly contracts that you can take on a Monday to the new week opening gap fill. That's all you have to do. That's making your week right there. Like that's your week made on one trade on Meta on the gap fill for the earnings report with the correct structure and capitulation being developed, right? NVIDIA 183, cracking through that is a pretty notably failed breakout on this name, right, which we could be seeing set up. I don't really, like I said, have a lot of confidence in aggressively shorting things. This is a pretty notable bleed today. But when we have a massive like consolidation underneath this range, and especially like this earnings report sparking kind of some volatility there, filling this 164 gap, getting a higher low, a nice spike, some absorption and compression occurring, and then a really weak breakout with a sign of a buying exhaustion occurring. I mean, I think this is developing a range nonetheless, but I would want to see a crack under 183 really to get notably aggressive. And then we have Tesla, which, this made its move. This was beautiful within this range. Easy move like butter, distribution developing. So that's really pretty much it for me. There's a good amount of longs and some cyber names. This was actually pretty clean on CrowdStrike. Oracle just got hit with some news. I know that. PNW is not really a good long. There's a good amount of long sitting up, but I think you have to be cautious. I mean, if you're literally just longing stocks this year with some shorts in Q1 and maybe in May, you're up handsomely, right? And so there's not really a big point in getting very aggressive to end off the year, picking your stocks and knowing what to do, when to do it, and how to play the windows. I do like Pepsi potentially. It's not like my favorite look, but it's definitely there, right? It's definitely there. Yeah, I mean that's pretty much it. When I look through a lot of these stocks, I really like Nike going forward. I will say that 100%. If I had to pick out a handful of stocks, UNH would be, I wouldn't want to have a big exposure in that anymore in terms of like leverage, but this would and still is going to be a focus of mine massively. I mean, you look at the entire healthcare sector, a really big spike last week, right? Like a really big spike last week, a really big higher low, a really notable undercut of the April lows. I really like UNH going forward for a little bit more continuation. I mean, obviously, I wouldn't massively open up a leveraged position right now. That'd be pretty irresponsible. But the correct approach to this and trimming and adding when necessary is an underrated skill as well. I think taking your profits, de-risking your position that a lot of people don't. A lot of people don't necessarily understand, right? And then I think Nike's going to be a great trade going forward. You can trade this from low 60s to 80, and then potentially 90 to 100, right? When we think about the accumulation that started, really similar to Intel, right? Very, very similar to Intel in terms of a chart like Nike, right? Very notable similarities between the two. I think Intel could have a little bit more room. I'll be a little bit cautious. I really like CRM within this range, and I really like Snow going forward, right? And then a couple of names that I'm paying attention to. That's pretty much it. I don't necessarily have much else to say, right? I think that you're going to have to be pretty cautious going forward, but you're going to also have to just buy stocks when you think that they're going to work with the correct approach on risk and understand when you can really get aggressive short, and that's within those windows of weakness and within the window that we have post January expiration. So that's pretty much it.